All right, so let's take a look at the market here for April 11th, 2023. We'll start at the pound US dollar. So let's take a look here. This is the weekly chart. Seems to be a sell block here that pushed price down. Price pushed down and wicked back, which means there is a lot of buyers in this area right here. This was a big buy area. Price pushed up, but had a little trouble going up, which makes this here the best area to buy, which is a buy block, order block for buyers. It pushed up. Then we had some choppiness, but in my opinion, this isn't financial advice, but this is my opinion. It's probably going to go here to sell and maybe a little bit beyond just to kind of grab some liquidity for sales. Try to hit some stop losses up this way, and then probably back down or even further down to grab some more of the stop losses down here for the buy orders. Remember, every time you sell, there are stop losses. So here's the order block. Typically, when you have a big push down, like an engulfing candle like this, and you have a break of structure here, let's do this right here. This is kind of a structure. So you got the highs and lows, and then a lower high, and then a lower low, and then a lower high. And then you stopped about right here, kind of made some decisions, and then blew past that lower low and started making lower lows, lower highs, lower high, lower low, lower high, lower low, lower high. About the same here, and then another lower low, lower high, and then way big push down, big push back up. So all these right here, wherever you see a big push, is usually an area of, I'll say, concern. Concern is a good thing. Concern means there's something happening here. So price may push back down, since this is the original area where the bulls came into the market and pushed price up. Maybe break a structure right here that looked like there was some hesitation. We can look at that on a 4-hour chart. So let's pull this back. This is a 4-hour chart here. Yeah, really not a lot there. The simple thing to do typically for me, and this is just me looking at the charts. Let's go to the daily chart. A lot of times I will look for areas just on the higher time frame, because those are the most reliable, less choppy. But sometimes you can go all the way here to the monthly chart, and as you can see, this monthly chart here, this price has been going down. There's no other, after 2002 in May, there's no other information to the left, and it has dropped completely past all the information that we have. If you kind of do this, you kind of get a visual of what the market's been doing. Uh, you can do this as well. Do this here, and then kind of see that the market's still been kind of going in a downward area. These are little trend lines that people like to use. I don't really use trend lines. Sometimes I use trend lines just to kind of give me an idea that the market's going down. Good rule of thumb I like to do is I like to step way back from my computer. Like, I may pull this up on a bigger screen and step way back to kind of see what the market looks like. Sometimes being within a foot or two from your computer kind of confuses you a little bit. Sometimes it's better just to kind of step back and take a look. But as you can see, this area right here is a big area of concern. Price will come back to this area at some point, and they call it mitigation. Uh, when big banks move price, a lot of times all their orders don't get filled. They do limit orders, so sell limits, and sometimes they don't all get filled, or the banks push the price up, so they do buy orders to get a better price to sell. So they may push the price up and then sell, and then I'll still have these buy orders right here that need to be mitigated. In other words, this price right here, these buy orders are way negative, right? So they're way negative. They used it to push price way up, get a better price to sell, and then they got buy orders here that need to be mitigated as well. In other words, right now their sales are making a great amount of money. They probably took some profit here. Uh, and then the market went choppy, started going back down again. I don't really see any more major buys or sales. I mean, maybe right here was a buy area, a sell area, but I haven't really seen a big move up. So their buy orders, if they have not closed them out or zeroed them out, will need to be mitigated. And what's going to happen is you'll see somewhere as it goes down and down, there's going to be a push back because they do not want to lose money. So you will see price, at some point, probably kind of just bounce around a little bit, then start, pushing back up. And what this does here, this is the buy orders they use to push price so they can get a better price. And this in negative will start gaining traction. And what's going to happen is when they get back to this spot, they were either sell again, or they will push price past the buy orders to put them in back in the positive to make money. So us as retail traders, we know we don't move the market. I mean, that's already understood. Big banks move the market, and we try to ride the coattails. When this fell, probably most of us, unless you drop down to a smaller time frame, probably didn't get in right away until that major drop happened. See, this is a weekly chart, still a big drop, no pullback or anything to that nature. So let's see, let's keep going back. This is the daily chart. Let's see, there's really nothing to tell you. It's just a gradual, just not a lot of movement, just small moves down for a while there. But anyway, let's go back. Let's clear this. So let's look at trading today. Let's do a market analysis. All right. So we had a big push down here, but price has seemed to break that. So let's just kind of use the daily chart as an area of where price moved just in this small block. That way we don't get too confused looking all the way back. So this is the weekly. As we can see, price has kind of broke that area. Kind of had some hesitation here, pushed through, and then come back down into this area. But it's looking like price is probably going to push up. And again, this is not financial advice. It's not trading advice. Just as education purposes only, kind of understanding supply and demand. This order block here seems to be where price was pushed up, just a sell-off. And then it has been going down ever since. This is a break of structure. If you don't understand what that is, market structure is, the low, the high, the higher lows, the higher highs, and it moves. The price moves like a step. People take orders, people take profits. So if you go down here, buy orders, profit taking. Some buy orders, profit taking. Buy orders, profit taking. Buy orders, profit taking. Buy orders, profit taking. So my opinion for this, and seeing this, if this engulfing candle stays, I believe price will probably kind of go back here and then maybe kind of back down. Um, Not really a lot to see on this chart. There's just this area here. This order block here has seemed like it's already price had already went back to touch that. So price shot down and went all the way back up, probably to mitigate the risk so it doesn't last long, and then it kind of shot back down. If you kind of look at this order block, we're looking for new order blocks where price hasn't really went back to and touched. So this has been touched, so this is no good. This kind of looks like an order block, a push down, then a push back up. So if we kind of get that whole area right there, see prices went back down into it and has pushed back up. This area here, price may come back to, in my opinion. Usually you want to find an order block that breaks structure. So this is our structure here, kind of up, down, up, down, up, down, up, and then it breaks, kind of breaks. It doesn't break structure there. It goes back down, then breaks structure. So what I like to do, I like to find areas that break structure. So this is kind of your structure area. Nothing's really breaking too terribly bad. Up a little bit, not really an order block here, then a confusion here, then up a little bit. It's kind of in the same area, and you can actually move that all the way over here. This is kind of structure. This is kind of a bunch of just mess. And then until this order block here, it pushes up. So this order block here is probably a good area. Whenever it mitigates what it's looking for, it will probably mitigate and come back toward this area. And again, this is just my opinion. This isn't financial advice. So let's look at Euro USD. Let's close that. All right. So we're still moving up. It did touch this area. Not really deep though. We probably want to see something. Probably want to see something go a little deeper, maybe up into here. And this is where buy orders or stop losses will be, somewhere in this area. When you take a sell, you got stop losses. They go up here to keep price, to keep your bank account intact. You don't want to sell and then price push way through and you're not paying attention. Just be careful with your stop losses. Banks will try to stop hunt. And what I mean by stop hunt is they may buy this really big and then they may push price down to stop you out, to make you think it's going sell, make you think the market's going down, and then they'll buy again and they'll push it all the way. They'll push it all the way up. But right now, this is my prediction for price. It may go back into this area here, somewhere up in this area. And then of course the market moves in steps. So probably something like this, or maybe the price will push all the way down to try to grab some stop losses, somewhere in this area. But always remember, the market can do whatever it wants. The banks will move these markets however they feel to make themselves money. We just want to ride the coattail. So when we see these order blocks, usually price will come back at some point and hit this order block just to mitigate, or grab some of the sale limits that didn't get hit, and they'll probably stop punch you. They want to get your money. So just keep that in mind. The bank wants your money. For every buy order, there has to be a seller. For every sell order, there's got to be a buyer. There's got to be somebody on the other end that's going to lose their money. So let's try to educate ourselves so we make sure that's not us. See the Aussie dollar, same thing. I'm going to leave these areas of concern up. Same thing here. Let's look at break of structure. I'm sure some of y'all might have heard that BOS, break of structure, change of character. Yeah. So we had some sell orders come down here, got choppy, went down some more, come back, hit this same area again, went back down, and then looks like we had a buy order right here, right? We got a buy block. In my opinion, like I said before, it didn't break structure. right? Because it just went up and then hit the same structure again. But it wasn't until this buy order, this buy block right here, sorry, buy block right here, the red candle goes up, push back down to get a better price, and then shot up past the structure, and this been going up ever since. We had it went up. We kind of had some doji candles, a hammer. You would think there would be a big buy here to push, continue to push price up, possibly, and then the next area to me, because this has been kind of mitigated. This was a big push up and a sell off, but it came back. The next area I see would be possibly right here as an area of concern where price will, finally push past this area. But what I believe is more than likely this will bounce back down some, and we will probably, once it comes down here, come back up here. It could possibly push on back on through here and then hit up to here. But I believe it's going to go back down in this area. And what's going to happen is at this point, when it comes back down, we're probably going to want to find another buy area where the price, when it comes up here, is going to go back and mitigate their purchases. Euro JPY. This market, to me, in my opinion, looks really, really choppy. Like, we could try to do it like this. Kind of helps. I mean, we see kind of looks like it's breaking out of this. And this is where the trend lines come. We have your flag patterns and your pennants. And I don't really trade like that. I will use it to just kind of get an idea what the market's looking like. Because these breakouts, they could break out and come right back in. So I don't really use that too often. I will use it sometimes just to kind of get an idea what the market might be doing. You could possibly say this too. Trend lines are really not my favorite because when you start to change time frames, it gets a little even more messy. Like if you look now, it still broke the trend line a long time ago, and now it's back up and down, back up and down. So I typically don't use that. Let me move my. But what I do see is this huge sell off right here. So a huge sell off here, and price is already mitigated. Price has mitigated that, and now price has been hitting this. So more than likely, the orders have been filled here several times and mitigated several times. It could probably and will probably break through that area. There's a lot of concern right here. A lot of touches. Possibly right here, the price will maybe move back down. This is kind of an area of confusion. And see, this is another big sell-off, but price pushed right back through it. Several big sell-offs. Here's another big sell-off. Price did touch that and go back down. Sometimes the moves are big, sometimes the moves are small. So here's another channel. Trend lines. It broke. New Zealand dollar. So let's get rid of these. Possibly right here, but it's mitigated a couple times. So more than likely price will probably push down here and then possibly make its way back up to mitigate. All right. Well, thanks for watching.